Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that drive business success. Today, we're going to talk about how venture capital works, a crucial aspect of funding and growth for many startups and businesses. To start, let's define what venture capital is. Simply put, venture capital refers to the investment of money in a business or startup by an external party, usually in exchange for equity or ownership shares. This type of funding is often sought after by entrepreneurs who have innovative ideas with high growth potential but lack the resources to turn their vision into reality. The origin of venture capital dates back to the 1940s and 1950s, when investors like Georges Doriot began providing financing to early-stage companies in exchange for equity. Over time, this concept evolved, and today venture capital is a multi-billion-dollar industry that has played a significant role in shaping the modern business landscape. At its heart, venture capital investing involves a trade-off between risk and potential return. Investors seek out companies with innovative products or services that have the potential to disrupt markets or create new ones. In exchange for funding, these investors typically receive equity in the company, which can lead to significant returns if the business succeeds. Influential thinkers like Peter Thiel and Mark Andreessen have shaped our understanding of venture capital through their investments and writings. They emphasize the importance of finding companies with unique value propositions, strong teams, and scalable business models. Our understanding of how venture capital works has evolved over time as well. For instance, the rise of seed funding, crowdfunding, and corporate venture arms has expanded the range of options available to entrepreneurs. To illustrate how this concept plays out in practice, let's consider some notable examples. Companies like Facebook, Airbnb, and Uber all received venture capital funding at critical points in their development. These investments enabled them to scale quickly, innovate, and eventually become household names. On the other hand, failures like Theranos serve as cautionary tales about the risks involved in venture capital investing and the importance of due diligence. So, how can you apply the principles of how venture capital works in your own ventures or careers? First, it's essential to understand that venture capital is not just for tech startups. If you have an innovative idea with high growth potential, regardless of the industry, you might be able to attract venture capital. Secondly, be prepared to pitch your idea convincingly, highlighting your unique value proposition, market opportunity, and competitive advantage. Networking is also crucial in the world of venture capital. Attend industry events, join startup accelerators or incubators, and connect with experienced entrepreneurs and investors who can offer valuable advice and guidance. And don't be afraid to learn from failures. Every successful entrepreneur has a story of setbacks and perseverance. In addition to these tips, it's worth noting that the venture capital ecosystem includes various players like angel investors, venture capital firms, and corporate venture arms, each with their own investment strategies and focus areas. Understanding these dynamics can help entrepreneurs navigate the funding landscape more effectively. Furthermore, research findings have shown that startups backed by venture capital tend to grow faster and are more likely to go public than those without such funding. This underscores the potential benefits of accessing venture capital for businesses with high growth aspirations. In conclusion, understanding how venture capital works is crucial for anyone interested in entrepreneurship or investing. It's a complex and often misunderstood world, but by grasping the core principles and applying them practically, you can unlock new opportunities for growth and innovation. Remember, every great business starts with a bold idea and the courage to take action. As you navigate your own entrepreneurial journey, keep in mind that venture capital is just one of many funding options available. Bootstrapping, crowdfunding, and traditional lending are also viable paths, depending on your business needs and stage. The key is to stay agile, adapt to changing market conditions, and continuously innovate. That's it for today's Business with Louis. Be sure to like, share, and subscribe, and remember, every great business starts with action. Make your next move count.